Good morning, traders. It is 8 a.m. Chicago time on Thursday, the 20th of July, 2023. Thanks for coming in today and being with us, or thanks for watching this video later on in the session. Whenever you get to it, we definitely appreciate it. This is episode number 2506. Derivatives trading is not reasonable for, derivatives trading is not, I've only said this about 1,000 times, is not suitable for all investors. Past performance is not necessarily indicative of future results. So we've got a fair amount to cover here because there's pretty decent action. We're going to start out with our, just following the process. We're going to look at our convergent trading pre-market summary sheet here. Again, follow on Twitter, twitter.com/comp trading to get this as it drops at 8:50 Eastern US every morning or thereabouts. The market posture this morning is mixed, slightly off. The NASDAQ being a laggard, the NASDAQ just can't get off of the lows here. And really, at the end of the day, the focus is, what came out through Netflix and Tesla yesterday, and so on. There were some interesting developments there. Netflix having picked up more subscribers as they killed the shared password thing. But the prospects for the future are not looking so great, apparently, based on that report. But really, this is all about earnings right now, and you could see that there's a disconnect between the indices. For example, IBM came out pretty strong in certain areas, weak in others. IBM's software business is quite strong, weaker in others. IBM is a big component of the Dow, so the Dow is basically unchanged on the session. Down 3 basis points or 7 points. You can see from the rotation chart that one rotation in the Dow could be up to 32 points, and it's only down 7 points. So it's essentially unchanged on the session, while the NASDAQ's way lower, 83 basis points or 0.83%, 132 points, and the NASDAQ's quite weak relative to the fact that the S&P is holding at negative 0.31%. We don't see that often outside of earnings because the components that are reporting have a much have a very varied weighting within the index in question. As I said yesterday, Microsoft is something like 14% of the NASDAQ, but only 7% of the S&P. And so on and so forth. So there's duplication. The S&P is much more broad than the NASDAQ. The NASDAQ only has 100 stocks in it. The S&P has about 502. It's called the S&P 500, but it has, I think, 501 and 502 components. And so they're represented, but their weighting is different. And so the market cap for the whole index versus that individual stock is very different. And that's why we're seeing a lot of this, in my opinion. So that's what we're looking at. The pre-market, we had a bunch of reports. I can't go through these reports. There's just not enough time for that. And this isn't the purpose of the Trader Bite, to sit here and analyze what's going on with these earnings. I'm not an analyst, but it's really important to stay abreast of what's going on, what came out, what beat, what missed, what guidance looks like, things like that, because that has an impact on how the underlying index or the represented index trades. Johnson & Johnson, Taiwan Semi, Anglo-American Travelers Companies, Abbott Labs, Philip Morris, and a bunch of others reported before the open. After the close, we have Capital One, SAP, PPG, CSX, which is logistics, and WR Berkeley, all reporting after the close. You have, let's see. Yeah, those are the key players there. SAP out of Germany, Philip Morris, and so on. Blackstone is in there. DR Horton, Truist, Capital One, Travelers, Newmont Mining, PPG. Yeah, so those are covered. Other news, other influencers. Again, initial jobless claims just came out. Initial claims came in again relatively hot, 228,000 new claims versus 242 expected. So the labor market still on a week-to-week basis remains pretty tight. That's interest rate bearish, so to speak. PPI from Germany came in at negative 0.3% versus negative 0.4. So the PPI disinflation is not as strong as expected. And then other than that, we had Philly Fed, not a huge release. Philly Fed missed, came in at negative 13.5 versus negative 10 expected. PBOC sets up support for the yuan. They're really trying to peg the yuan and support it. China to increase support of private businesses. The White House says Russia may expand targeting of Ukrainian grain facilities to include attacks against civilian shipping in the Black Sea. Russia just came out, actually. There was a news event here not so long ago. I heard it this morning. The Ukraine said the same thing. Ukraine Defense Ministry said it could consider all ships traveling to Russian and Ukrainian ports occupied by Russia on Black Sea as a potential carriers of military cargoes, which makes them targets. So that's just that whole thing is just messy. It's like it's just a mess, unfortunately, that the world has to deal with. But that's that. I'm going to move on because this is too much to cover. There's way too many things there. What's remaining for today that's really important really is the inflation rate out of Japan, and that comes out at 7:30 Eastern. Pay attention. The expectation is 3.5%. 3.5% expected this evening. Other than that, nothing else is really significant. We do have numbers at 10 a.m. today. The existing home sales for June, we're looking for negative 1.2% month on month. And an existing home sales units looking for 4.25 million. Let's move on. Looking at the S&P, the S&P this morning is pretty much balanced for the session. It is breaking lower now, which is really significant here. We covered this yesterday as a very possible scenario. We'll talk about it right now, right after this. But the market's going from balance to imbalance in the S&P on the overnight session. The volume's pretty decent at 186,000 contracts. The inventory is 100% short. The market has moved lower and has not looked back since those earnings yesterday. So the inventory is 100% short, and the range is 13.75, just slightly better than what we've seen for the last couple of days. Point of control remains up high at 45.90. This is where it was yesterday. So we opened yesterday. Today's overnight session is a replay of yesterday's overnight session, but upside down. Yesterday's overnight session had the point of control at 45.90 and was pushing highs, was squeezing higher right before the open at this exact period. Today, we're doing the exact opposite. We're holding the point of control at 45.90, and we're squeezing lower in the same price range. Yesterday's overnight low was 82.25. This morning's overnight low is 45.81. It just moved to 45.80.50 just now. So all of that is really important to note. I'm going to go over what we talked about yesterday, just so you have a frame of reference of, and the goal here, just to be clear, the goal here is not to say, hey, look what I said and look how the market responded to what I said. That's not the goal here. The goal here is to repeatedly instill in you the process of planning versus what actually happens versus and then accounting for what happened, looking at what went wrong, what was missed, or how the market responded, so we can learn from it, because we need to incrementally adapt to what the market is doing so that we can continue to adjust and change expectations over time. This is the part of the Trader Bite that maybe seems like I'm just sitting here telling you what I said, hindsight 2020, but the idea here is to tell you here's the plan. Here was the plan yesterday. Here's why the plan yesterday was what it was. Here's what actually happened, and here's how that feeds into today. And then those dots, as you connect them, create the narrative for today. And it's very, very important to do this. Very important to go back and look at what you expected versus what you got. So yesterday we talked about this important area up here between 45.83 and 45.81. Okay, and yesterday, because the overnight low was 45.82 and a quarter, we had dipped into those single prints at 45.83. The single prints from Tuesday. I have a better illustration of this in a minute. We dipped into them, but we started to push higher right before the open. And what I said is, this area is behaving like support. This is an area that's really important to defend, and they successfully defended it yesterday and rallied right off the open. The open yesterday, we opened right at the low and we pushed off, and it looked like an open drive. This is a very clear early indication that you don't want to get short. You don't want to short an open drive. But I said if it does fall below the 83 below that 83 area in the RTH, and it closes those singles down to 81, it opens up the gateway to 65 and 60. That opens up the run to 45.65 to 45.60, which is the high from here and the high from here. And it coincides with these single prints. Okay, so that's in play today. That's in play for today now, much more clearly. For the NASDAQ, here's what I said about the NASDAQ. And this is important. I said the same thing. Hey, if the NASDAQ comes in and it was opening higher and it gets down into the settlement price, and we have a gap to settle trade that doesn't hold, and it starts to fall, then the NASDAQ is very likely to check the 868 area, 15,868, and if it gets through the 15,868, it is likely to push down into this key support in the 816. I didn't finish writing it here, or I haven't selected the right part of the video. I don't know. It's the 816.17. This is the beginning of the single prints, and this is beginning of support. This is really important support. Here's where we are today. If we look at the NASDAQ here in real time, this morning, so remember, this is the 16 area right here. This is where the market is right now. This morning, the NASDAQ, it opened up, it opened lower, it traded this entire range of singles and was resting here until this last push. So we are right up against that support area, potential support area where the single prints started for the NASDAQ. There's this region right in here is important for buyers to hold right now to continue to squeeze the auction back up. The sell-off yesterday was predicted as a key play. The target yesterday was 15,890. It did not get to it. That was pretty frustrating. It did not get to it, but the overnight session got the trade done that was expected yesterday. So here's yesterday's action. You can see that the NASDAQ yesterday, bracket, the first bracket up and down, the second bracket extended the first bracket lower. So this started to give me indications that we may touch the prior settlement. And then it reversed the other way, and then it tried to continue pushing, put in a double top, double TPO high, set up a pullback long right here. You see that little high right there against this little low, set up a nice little trade against that area, the 16,020 area or so, set up a nice little trade there for a push to target the double TPO high statistic, which is something like 81% or so historical probability that 2 TPOs at the high are likely to be taken out by the end of the session. Past performance is not always indicative of future results. And then it kind of does it, and then it immediately sells off. So the NASDAQ, to me, looks like it's just absolutely exhausted. And so it plays to the other side, and you can see these bubbles that start coming in. The order flow starts hammering on those bids, and it actually gets some follow through, and it goes neutral on the session, meaning the yellow line there that you see, that's the initial balance. And what it did is it took the initial balance high. So now there's a very low historical probability, relatively low historical probability that it would take out the opposite side. It's around, can somebody tell me what the NASDAQ is? Somebody from Convergent who has the market stats reports. I don't have that number in front of me. It's around 30-ish% historical probability that if it takes out the one side, it's likely not to take out the other side, right? This is the neutral stat. And it did do that, and this is a significant indication of weakness. And so we were looking for trading pullbacks short, trading pullbacks short, and that was the play for the session. It was difficult. It was a struggle to hold on to those shorts, but we ended up pushing to 15, 19, 10-ish yesterday, like 15, 9, 11-ish, I think is where it ended up. And I had written in the Convergent chat room that I was looking for the 890. I was looking for it to close these singles at a minimum, but we ran out of time. We ran out of time during the session, and then the earnings came out. Earnings came out on the close, and we immediately sold off. See this right here? Big impulse down. We immediately sold off, took out the 15,900, went to the 15,890, came back to the 15,890 right here for the continuation, and now we're continuing to squeeze lower. You can see that it's holding the day generated levels on the full session, and overall, unless it gets above those now, unless it starts to squeeze and push above the prior session's low, this is likely to more easily flow to the downside. You can see the order flow also is negative so far. The delta is negative. We have large lots, very large lots, and small lots all kind of working together. The inventory is 100% short there too in the NASDAQ, so we know that there's a very good chance. Remember, as traders, we're trading on probabilities. I'm placing a bet in this moment on a historical probability to see that an outcome is a win in the future, but the probability of that outcome in the future being in my favor is 50%. The historical probability from the past may be 80%, 90%, but the outcome into the future is always 50-50. It's either going to happen or it's not, and then that data point, if it's a win, adds to the past, to that 80% probability, historical probability, or it subtracts from it. And that's the reality. And that's why you see me referring back to quantitative measures or statistics all the time, because I'm combining profiling, the auction, that's the base, that's the foundation, and then I'm layering statistics on that. What is the likelihood, or what are the habits of this particular product? What is the likelihood that it would do this over that historically? So that's in the past, that's in the rear view mirror. But that doesn't tell me that there's an 80% probability that something happens in the future if it has happened in the past. The future is 50-50. So we get the auction, we describe the auction using profiling, we use statistics to figure out our edges in any particular situation, very fixed situations, overnight highs, lows, IB stats, day type stats, all kinds of stats. There's a whole slew of them. And then we layer on top of that order flow specifically for execution and entries. That's the whole stack, so to speak. not to sound like a software developer, but that's the whole stack. That's the entire process that I'm covering with you. So I want you to understand that because it's really important for you to get an idea of what the heck I'm talking about. We're leaving yesterday's auction behind here in the NASDAQ. Okay, very balanced auction that finished down low, but actually settled inside of that actually settled down below and finished at the lower end of the range. This is a neutral extreme down day. That's a day that statistically has pretty good probability of a follow through, and generally we see these at the top of a rally. So at least for today, we expect the market to be weak, and if it's not able to pull back enough to find those buyers to push it back up, then it's likely to continue down tomorrow and however long it takes to continue to examine for those buyers. Here's the S&P. The S&P opens, shoots up, okay? Very strong initial rotation up, pulls back to mid, pulls back to VWAP, squeezes an IB high, double IB high, and then it surprises everybody by breaking the other side. So the S&P is in a whole different world versus the NASDAQ. It goes neutral, comes back, crosses the IB again, and settles inside, whereas the NASDAQ settled weaker. And then from there, we open down, and we've been mostly in balance versus the NASDAQ, which has a little bit of a downward skew. So what are we looking at here for today? Let's look at the S&P for a minute on a TPO chart. So you can see here, it's done a good job migrating volume and acceptance higher. It's done so for the TPO. We have a higher low, higher high, and guess what? This morning, that one-time framing up is broken. We're going to open below the last low, and so now we need to change our perspective on this bull run. On the daytime frame, our one-time framing is broken, so we can lean more on the short side than we could have in prior days. So on a structured setup, I'm going to likely get more help on a long as the lows stay intact and one-time framing continues higher, the trend is higher, versus going short. Today, this is likely to be either balance, equal, mishmash, kind of wavering back and forth, or it's more likely to flow to the downside. Today, it's not as likely to flow to the upside unless it takes out the prior day's range low and then starts holding that range. If it holds the range, then it creates a gap to settle trade. So that's the primary trade up is gap to settle. The primary trade down is where? The 65 to 60. So in either case, we expect today to have pretty good range. We see that the market's out of balance. Really important to turn all this crap off and focus on the open today because the market's out of balance. It's likely to generate opportunities to reprice itself, okay? So that's the S&P. The NASDAQ, there we go. NQ, the NASDAQ, relatively weaker. So we kept our point of control at the low end and shot up on Tuesday. This is a very weak structure. I talked about this yesterday. Very weak structure that the balance and the point of control is remaining to the downside and price ran away. Very likely to come back. And I think I mentioned this yesterday, that it's very likely to flash back, and this structure is very weak. We have now pushed down into the low end of this range. The NASDAQ's likely to get trapped. So any push higher in the NASDAQ is not likely to give us a gap to settle trade to the upside Unless news comes out, anything can happen in the markets. But this morning, any push up is likely to be confronted with flow from sellers. The NASDAQ didn't even take its point of control outside of the prior day's range. The ES did. The NASDAQ did not. The NASDAQ's indicating weakness. And so what we're looking for today is the question we're looking to answer this morning is how does the NASDAQ respond to the buy side, meaning responsive buying? And how does it react as it's pushing up? Is it lifting big time with a positive delta, but price isn't moving very far? In that case, you have flow from sellers, limit orders filling, and it creates opportunities to get short through the open. And then we are wanting to target this 780 from the other day. Remember I said, pay attention to that 780 below. That area was absolutely battled the prior session. It's the point of control from here. It's the point of control from here. This is the area we're looking to target. So any push up this morning for me sets up a very likely short targeting the 780. Until it reaches the 780, I'm looking for the market to act like a yo-yo that's being thrown up in the air and pulled back by a string. That's what I'm looking for this morning. I know that's long, and I'm getting into a lot of detail because I'm getting a lot of questions, and so I'm covering it in more detail, but those are the key plans. For crude, it made a really great effort to come back to the high, and now we have a relatively weak high. It migrated all the way up from 74 to 77, almost to 77, only to take out the prior high by three ticks in crude and pulling back. So this low in crude right here at 73.92 is really important. If the market takes that low out, you're looking at 72 on a swing. Otherwise, I would expect it to flow in the direction of the action, and I expect this weak high or double top to be taken out. So this low becomes a key pivot for anybody looking at crude, in my opinion. Good luck, and I'll catch you tomorrow morning. Mind your risk, guys. Take care.